Hey everyone, and welcome. If you've ever traded trading Bitcoin, you know it can feel, well, completely chaotic. But what if I told you there's a clear, rule-based playbook for catching those huge, explosive moves? Today, that's exactly what we're gonna build. So let's just dive right in. You've been there, right? I know I have. You see Bitcoin smash through a key level, you get excited, you jump in, and then, bam, it reverses and kicks you out for a loss almost instantly. It is so frustrating. That exact experience, that fake out, is the problem we're gonna solve today. And here's how we're gonna do it. First, we'll tackle the main problem. Then we'll build our solution, step by step. We're going to find the perfect setup, add some really powerful filters, manage our risk like a pro, and then pull the whole thing together into one solid system. Okay, so let's get into what I call the breakout trader's dilemma. Look, the real challenge isn't just spotting a breakout. It's learning how to filter out all the noise and, more importantly, ignore the low-quality fakes, the ones that feel like they're designed to trap you right before the real move actually happens. And this is exactly why it's so tricky. Bitcoin has a very specific personality. You see, it spends most of its time in these quiet, kind of boring, choppy periods. And then, out of nowhere, it just explodes. Any standard strategy that just chases every little break is going to get chopped to pieces in those quiet times. We need a way to know when the market is primed for that explosion. And that brings us to the core idea of this whole playbook, the coiled spring setup. Here's the secret. The most powerful, most explosive breakouts almost never happen when the market is already wild and volatile. Nope. They happen right after a period of intense quiet and compression. And I want you to think of it exactly like that, a coiled spring. When you push down on a spring, you're just storing up all this kinetic energy. And the more you compress it, the more powerful that release is going to be when you finally let go. We're on the hunt for that exact same behavior in Bitcoin's price. So how do we actually measure if the spring is coiled? Well, our number one tool for the job is the average true range, or ATR. Now, don't let the technical name fool you. All it does is tell us how volatile the market has been recently. A low ATR means things are quiet, compressed, coiled. A high ATR means things are wild and expanding. That's it. Simple as that. Okay, so this is where we turn that idea into two concrete, non-negotiable rules. Rule 1, we are only interested, we only even start looking when recent volatility, the 14-period ATR, is super low. Specifically, less than 80% of its longer-term average. That's our coiled spring filter. And rule 2, once that condition is met, we use a simple 20-period Donchian Channel to give us a crystal clear line in the sand for our breakout entry. All right, having that core setup is huge, but, and this is a big but, we're not done yet. A good setup just identifies potential. Now we need to add filters to confirm the strength and help us dodge all those traps. This is really how we separate the A+ setups from all the mediocre ones. And our goal here is super important. We want to add just 2 or 3 really strong, robust filters. Not 10, not 20. It's so tempting to keep adding rules, but that just leads to overthinking and a system that breaks easily. We're after quality here, not quantity. Our very first filter is volume. We absolutely want to see the volume on that breakout candle be at least 1.5 times its recent average. Why? Well, think of volume as the fuel for a rocket ship. A breakout on low volume is like a rocket with no fuel. It's just not going anywhere. High volume tells us there's real conviction, that the big players are getting involved. Filter number 2 is all about candle quality. For a long trade, when the price breaks out, we need to see it close strong, in the top 30% of its range for that candle. If it breaks out but then sells off and closes way down at the bottom, leaving a long, nasty wick on top, that's not strength. That's a huge red flag of rejection and weakness. And you guessed it, for a short trade, it's the exact opposite. We want to see a weak close down in the bottom 30% of that candle's range. This confirms that sellers are firmly in control and have pushed the price down with some real oomph right to the end. And finally, here's an optional filter, but it's a really powerful one. We can check if the ATR itself is starting to tick up. This is like the ultimate confirmation. It tells us that our coiled spring isn't just coiled anymore. It's actively, right now, starting to uncoil at the precise moment of our breakout. This slide just brings it all together so perfectly. On the left, you've got the junk, a breakout that happens when things are already volatile, on pathetic volume, with a weak, indecisive close. That's a textbook trap. And on the right, you've got the gold, our A+ setup. It comes out of low volatility, it's confirmed by a blast of volume, and it shows a powerful, convincing close. That's the one we wait for. Now let's talk about the part of the system that, honestly, is the most important for long-term survival. Smart rules for risk. You can have the best entry signal on planet Earth, but if your risk management is garbage, none of it matters. And this right here is the absolute key. Bitcoin is volatile, right? We know that. So using a tight, fixed little stop loss is like trying to catch a cannonball with a baseball glove. It's not gonna work. Your risk, and specifically your stop loss, has to be able to adapt to what the market is actually doing right now. So how do we do that? You guessed it, we use the ATR again. For a long trade, our stop is the entry price minus 2 times the current ATR. For a short, it's entry plus 2 times the ATR. What this does, and this is brilliant, is it makes our stop dynamic. It breathes with the market. When the market is quiet, our stop is naturally tighter. When the market is going crazy, our stop is automatically wider, giving the trade the room it needs to work. Now for taking profits, we keep it simple with a 2-step approach. Step 1, we pay ourselves. We secure some gains by selling a piece of our position when the trade moves 1.5 times our initial risk in our favor. Then, for the rest of it, we let that winner run, using a trailing stop that's also based on the ATR to capture as much of that beautiful trend as we possibly can. And here's a pro-level concept I love, the time stop. You see, sometimes a trade doesn't hit your price stop, it just does nothing. It breaks out and then just drifts sideways with zero momentum. A time stop basically says, hey, if this thing doesn't get going within, say, 8 to 12 bars, I'm out. It's a way to cut trades that are failing, not by price, but by time. All right, let's pull all these pieces together and quickly recap the core principles that make this system work so well. And honestly, the best way to do that is to look at the common mistakes. Chasing every breakout in high volatility, using fixed stops, ignoring volume, making things way too complicated. These are the exact traps our playbook is designed to help you avoid. This list is basically your what not to do cheat sheet. So, if you take one thing away from this, let it be this. A great breakout system is not a machine gun that chases every little move. It's a high-quality sniper rifle. Its job is to say no 99% of the time so that you can act with total conviction on that top 1% of A+ opportunities. It's all about patience and precision. And that leaves us with one final question for you to think about. Take an honest look at your own trading approach. Is it built to intelligently filter for only the absolute best setups, or is it really just designed to follow every little wiggle in the market? The answer to that question could really make all the difference. Thanks for tuning in.